Hey, good afternoon, everybody, and happy Wednesday. It's Andy O'Fee, the Yankee Closer, with a market update. Lots of twists and turns going on in the mortgage industry, and we want to talk about some of those things that are occurring today and some things that you need to be aware of as we move forward through this crazy market. And again, most importantly, I hope all of our families and friends are being safe and making good decisions in regards to their health and their habits. So let's get into it. Mortgage apps were down, and let's talk about some of the servicing pressure that people are seeing. But the big news today is stock market. Nice rally after yesterday's 900-point rally dissipated within the last couple of hours. We actually saw it close up over 700 points. So, hey, a little bit of a relief there. That's pretty nice to see. So, yesterday I commented about mortgage applications, and the Mortgage Bankers Association releases that data every Wednesday. And I think that's kind of important to be tracking as we go forward, just to see how the state of the consumer is, given the fact that so many people are now looking at potentially forbearance, and then we're also looking at the amount of people that are not going to be working. So overall, the numbers, and I'm going to be sure to get the exact one. So the loan applications were down 18%. 12% of those were purchase applications. So in the grand scheme of things, though, a reduction of that amount, given the impact of the virus, the numbers are really not so bad. However, they are lower. So, something we need to keep our eye on as we look at the numbers each week. Again, if they continue to see a big increase in reduction of applications, then we know that the consumer is kind of taking a back seat to that. Now, here's something very interesting to look at, a thing that I track also year over year, but interest rates are actually lower, almost a full point, to be exact, 0.91 basis points year over year. So, hey, with all the stuff that's going on, rates are lower than they were last year. So, how much more can we complain about other than the fact that we are in a quarantine? And again, the housing market in the background continues to be very strong. So, the Fed is doing their job to stabilize the economy. We look at mortgage prices on a daily basis now. It's a little bit more calm. We're not seeing a lot of intraday spikes. So it's very good. The Fed is doing their jobs to keep rates where they are. Now, let's talk about the bigger problem that we have. The first one is going to be the impact of forbearance on the servicers. And that's significant because as more people dial in and claim that they are having difficulty making their mortgage payment, well, what happens to the servicers who are servicing those loans? And again, it's kind of a trickle down effect. What happens to the bonds that are making money from those payments that the consumer is making on their mortgage? Well, what happens when they stop? Well, it all kind of domino effects down. Now, Mark Calabria, who is the head of the FHFA, has made some really kind of crazy comments today in regards to where people stand. Now, there really is no regulation for you to stop making your mortgage payment. If you contact your servicer, they may ask you, why aren't you going to be making your payments? But there's really no definitive way of telling you yes or no. So the biggest thing that people are doing right now, and not necessarily here in Shelby County, and I hope you're not as a realtor, but don't be selling people that they can buy a house and skip payments for 12 months, because that's totally not right, and it's not true, and it's not ethical, and there's no integrity behind that. So please don't be saying that. These are people that are either trying to make their first, their third, or their fifth, or their sixth, or even they've been in the house for so many years, they're trying to delay those payments. Now, remember, forbearance is not forgiveness. It's going to come back, and you're going to have to make up that difference of payments that you miss. However the servicer schedules it. Do they want a balloon payment? Will they add it on? But it's going to have to be paid. It doesn't go away. So the pressure then rolls on into the servicers. Now, there is a program for government loans where people are taking advantage of this forbearance. And the CFPB is even out there making comments about how this could be extremely beneficial for people. And it will be, especially if you are suffering as far as income goes. So you need to explore that with your servicer. Ask them what your options are if making your mortgage payments going forward are going to be a problem. Now, one thing that people are missing, again, is this, and we're going to do something for you. I'm going to show you an amortization schedule, and the average mortgage lasts 10 years right now, and that's per the National Association of Realtors. What we're going to look at is a 10-year schedule over 30 years, and I'm going to show you what payments look like. And I can do this for you on any program that you want. So let's go ahead and we're going to flip it right now to an annual schedule of a property that has a $300,000 loan with an estimated interest rate of 4%. So over these years, first 9 years, this is how much your principal and interest, your total balance is, and this is what you're going to owe basically after 10 years. Now, if you were to skip payments for one full year, you can see the difference you're going to owe basically on your first mortgage, the difference between year 9 and year 10. Again, year 10 is the number of years that an average person is in a home. So look at that number. What is it? About $7,000 and change. Aside from any accrued interest that they may ask you for, and then of course there's also going to be taxes and insurance, etc. That's part of that down the road. But this is the first line that you have to look at. So this is a number that you will owe ultimately if you decide to defer or forbear 12 months of payments. And that is what you potentially can do. There is the option of delaying for up to 1 full year after you contact your servicer. Now, the biggest problem that you have now is that the government programs have this bailout, okay? Ginnie Mae, which are Freddie which are FHA and VA loans, they have the servicing that they can back these people with, and they can take care of it so that there is no major ripple effect. But Calabria from the FHFA department, from the association, is basically saying that, oh, it's just, don't worry about the conventional guys because the GSEs are going to be able to take care of everything, and I wouldn't really worry about that. I couldn't really describe the words, but it was really so cryptic. I'm thinking, my gosh, what is this guy really in charge of that group? And Steve Mnuchin, the Fed secretary, the guy's brilliant. I mean, he's just going to squash this guy down the road at some point and explain to him that, hey, look, you know what? You got to take care of the guys that have conventional loans too, or else the servicers are going to have bigger problems. So if you think about it, as more loans don't get paid, what happens to the servicers' liquidity issues? Well, they're going to go back to the originators and they're going to say, hey, you owe us this money for this loan that you originated 1 month, 6 months, 12 months ago, whatever it is. Hey, where's the money? It's not coming in. And that's where the originators and the lenders are going to start losing liquidity if they have to take these loans back into their books. Now, let's hope it doesn't really get amplified that quickly, but it's something we really have to be leery of going forward. Now, again, as a consumer, if you're a realtor and you're talking to an older client or even a previous client, and you have heard that they are having an issue with making their mortgage payment and they don't know who to call, they need to call their servicer again and discuss what their options are as far as deferring their payment. Don't call anyone else. Call the servicer. They're the ones that are going to be able to describe and give you your options on what you need to look at. Again, for the most part, the market is stabilized. The stock market was up today. Everything is moving along smoothly. Hey, rates are all over the place still on government products, okay? So don't get locked in and assume that you're going to be able to get a 4% interest rate with 0 point origination. I quoted one today on a VA loan. It required 2.5 points origination. That's because the government loans have the bigger risk right now, given the fact that they're backed by the full faith and credit of the government. And if they do go into default, the lender is guaranteed 100% of the money that was borrowed in the event of a foreclosure. So let's hope that this system works. There is a backdrop for the government loans. Let's hope people get smart and figure out a way that they can back the conventional servicers too, because we don't want to see a backlog and a credit crunch as far as liquidity goes, because everyone wants to lend money, again, because the backdrop of the residential real estate market continues to be strong and the demand is there. So I'd love to work with any of your buyers. If they're out there, please have them give me a call. I'm still getting applications in for purchases. I'm still looking at refinance obligations, but just remember one thing, the realtor, you are the number one concern for me right now as we go forward. Purchase business is what keeps me going, and that will be true until I leave the industry. So if you have any questions, please don't hesitate to give me a call. This is Andy Opie, the Yankee Closer. Sorry for a little bit of a longer video, but again, the twists and turns in this market, everyone needs to know what's going on. I hope you have a great Wednesday. I'll be back tomorrow with another update. Call me with any questions. Good night.